Okay, time to see what's on the radar for Dan Rohinton, portfolio manager at IA Global Asset Management. And Dan has a few companies reporting earnings this week, and you're keeping an eye on a couple of them for sure. The first one, people might recognize the name, Oracle.
Yeah, and the reason why this is important, and they report later this week, is it's the litmus test for OpenAI. So there's this dynamic that's played out in the last few weeks in the market where if you're adjacent to Google and the Gemini complex, Gemini being their frontier large language model, you've had a pretty strong run. And if you're part of the OpenAI complex, which Oracle is, along with NVIDIA indirectly, you've had a bit of a tougher ride. And the reason being, the market is coming to the belief that if you're taking share, you're ultimately going to win the AI pie, and there's a winner-take-all mindset still in the market. Yeah. And Google's gain is ChatGPT's loss. So I think the thing with Oracle that's important to understand is they put a huge partnership with OpenAI, about $300 billion in remaining performance obligations, which is a long way of saying big revenue contracts for compute. Yeah. And it's primarily training these models. And the market's asking the question, I think, reasonably legitimately, but I think there's caveats to it, that if you're spending $300 billion and your revenue is 20-something billion today, that's a big hole over time. And granted, you spread it out over 5 years, but that's still $50 billion a year. So I think that's the debate that's going on. So it's on Oracle this Thursday to let investors know how they're going to spend the money on the compute, which is the NVIDIA chips, and how OpenAI is going to pay for it, and why everyone should feel comfortable with it. I think it's a bit overplayed. I think there's a short bond trade, a short CDS trade, credit default swaps on the belief that Oracle's a credit risk. I think that's way overplayed, but I think there's legitimate opportunities for Oracle to explain why this makes sense and why the profitability of this is more robust than the market believes today.
What do you want to hear from them that'll kind of ease?
Capital visibility. They need to explain how they're going to spend, because they're basically going to be spending something to the tune of $70 billion, I believe, by 2028, 2029, when it's the peak build-out years. Yeah. So you have to explain how you're going to get there, how you're going to finance it, because there is a cash flow deficit that they hit. So even Oracle, with all of the database revenues and profits it gets, 60 billion a year is a big dollar to pony up. So they have to explain that. And the second piece, they have to explain why the OpenAI ChatGPT relationship is money good. And if it's not, can they do something else with it that's just good enough? And I think they need to answer those two questions. And if that's the case, the rest of the quarter won't really matter.
Okay, let's get, we got one more we want to get to, Broadcom.
Yeah, and ironically, this is part of the Google basket. And so
the yin and yang.
Yeah, the two sides of it, right? So, Broadcom, Avago Technologies, it's gone by different names. Same legendary semiconductor CEO, Hock Tan. They own what's known as the ASIC, or the Tensor Processing Unit, the TPU. Yeah. Think of that as just a more customized version of NVIDIA's chips. And they effectively do the same thing, but they're a lot cheaper. There's technical things that's not really worth boring everyone in the crowd with.
They're slightly different.
They're slightly different. Let's settle on that. But Google buys the TPUs from Avago. So the reason the stock's done really well is Google's success, on top of the fact that Avago has proven that other customers are interested as well. Now the question is, that's all priced into the stock. This company used to trade at 15 times earnings, 18 times earnings. Now it trades at 40, or 50 on its way to 40 next year. Wow. So the valuation is in a total different stratosphere today. Yeah. Why that may or may not make sense ultimately comes down to, can Avago sign up more customers for what they're doing? And those revenues can't be a few billion at a time. The CEO's compensation package has about 120 billion of these revenues. So they need to become and prove that they're on the path to being the legitimate NVIDIA challenger that the market thinks that they are. And I think in that case, then the stock's going to have a good day. If there's questions or push-outs, I think it might be a bit of a miss. So you have, in one sense with Oracle, pretty low expectations as a whole, I would say, for somewhat good reasons. And on the other end, you have Avago, which has extremely high expectations, also for good reasons, but it's possible to miss very high expectations and come up above very low expectations. So it's going to be an interesting week in semiconductor land.